And Mohamed, after those better than anticipated numbers we got for the jobs report on Friday, what does this mean from the Fed? You've got Bank of America out this morning saying that they are now anticipating 7 rate hikes this year. What do you think?
Yeah, 7 rate hikes from Bank of America. The center of gravity is between 5 and 6. 40% chance now, according to the market indicators, of a 50 basis points hike in March. We've seen this massive realignment of expectations. I think they're excessive, not because the Fed is not behind, it is way behind. And because it is way behind, it has lost control of both the inflation narrative and the rates narrative. But I question as to whether the economy can take 7 rate hikes with quantitative tightening on top of that. So this is going to be quite an interesting time. The good news, Becky, we must not forget that, is, as you heard from Mike, stock markets have been incredibly resilient to what's been happening in fixed income.
Mohamed, let me ask you, what would the market's reaction be if we actually saw 5, 6, 7 rate hikes? Would they cheer it because it would be something being done to slow inflation, or would they be very concerned about that? And same thing if they don't. If they only do 2 or 3 rate hikes, what's the market's reaction if inflation continues to climb?
So because the Fed is so slow and behind, there is no first best. You have to. So the question you ask is really important, but it's hard to answer. My own gut feeling is there's 2 things that have kept stocks relatively resilient. One is corporate earnings, and 2 is behavioral conditioning. And that both of these things have come in. And we've seen when there's a surprise on corporate earnings, whether it's on the way down, Facebook, or up, Amazon, you get outsized moves because liquidity isn't there. Put that into context, a lot will depend on whether the economy can absorb 7 hikes and QT. I'm worried, to tell you the truth, as to whether it's going to absorb it. I didn't want to be here in terms of having to go do so much because the Fed is so late. But unfortunately, this is where we are.
So if they do rate hikes and quantitative tightening, maybe that gets them to the point where they feel like they're getting control of the inflation picture. But you've got $19 trillion that individuals and companies now have in terms of what they can spend. That is a lot of money out there floating around. Even if the Fed does start acting pretty quickly, how long do you think the inflation picture can continue, can keep pushing higher?
Yeah, and remember, the Fed is still injecting liquidity into the system.
Right.
The ECB is still injecting liquidity into the system. I mean, who would have imagined we would have a 7.1% inflation reading? People think consensus is that Thursday's number will be 7.3%, with core going up to 5.9, and yet we are still injecting liquidity into this economy. This is how out of date and behind Fed policy is. So hopefully they can regain control of the inflation narrative. Hopefully they can regain control of the rates narrative. My concern is that the market is running away with rate hikes that are in excess of what I think this economy can absorb.